Hey everyone, welcome to the KE Report today, daily editorial on Tuesday, October 28th. I am chatting with Darrell Fletcher. Darrell is the managing director of commodities over at Bannockburn Capital Markets. Darrell runs the commodities trading desk over at Bannockburn. So I bring Darrell on about once a month just to get his update, his thoughts on what we're seeing in a wide range of different metals sectors, commodities broadly, actually, that he helps trade for his clients, mostly in a hedging factor. But Darrell can give us the inside scoop on where some of the big players are positioned and what trends he is seeing. Darrell, let's start off with recently you were at LME week in London. I'm curious what the vibe was like there. What were people talking about? What stood out to you?
Yeah, hey Corey, thanks for having me on again. It was really positive. I've been to several of those, and the vibe is very positive for base metal pricing going forward. A lot of really good discussions at the LME seminar. There always is. It was sold out, and it's probably the biggest crowd I've seen there since I've been going. Kind of pre-COVID, there were some really big crowds, but it's kind of back to that level, if not higher. And it's fascinating year in metals across the board, whether it's precious or base. So yeah, it was very positive. I think the poll, it's interesting every year on Monday, they do the seminar poll of kind of going forward. You get to vote on which base metal is the most kind of promise. I think you'd look at it for positive moves higher. And I think it was interesting this year. Copper was one, aluminum was two, but not far behind, and then tin was three in that order. It's like a one, two, three. But yeah, overall, really positive. Great crowds as usual, but growing. And a lot of the discussions, like the side discussions I had and talk around specific things had to do with not just basis differentials, like we've had this LME to COMEX copper move, and now you've got the Midwest premium and aluminum, but also time spreads, especially like some of these moves we've seen in the front of a lot of these metals where you've gone into these backwardations. Like today, we're getting the big move in zinc. Silver had that move a couple weeks ago or a week ago. So a lot of talk around that, but overall, generally very positive.
Okay, you brought up the backwardations. That's what I wanted to talk about. First, it was silver a couple weeks ago. Quite a large backwardation, a couple dollars actually. I don't know if we've ever seen it that high. It was pretty quickly rectified, but again, silver was in backwardation. We heard all about how there just wasn't any silver available for people to buy around the world. But now we also have zinc in a backwardation. Zinc is a little bit different, I think, because it is coming right around, or actually, well, you take it. Well, what's going on here? How did you view the silver backwardation? What's going on with zinc right now?
Silver backwardation was really, to your point, very rare, and I don't follow silver as closely as I do base. So I think a lot of that had to do with there was definitely some concern in the London markets of actual physical silver, and those lease rates blew up. Also in India, and I don't know how much of that's kind of overblown versus what it really, what the real physical market was, but it was clearly short. But it's just interesting because you're seeing these things roll over into other metals, and it seems like every day there's another one. Like today, I think I don't know if we're near a record, at a record, and the cash to 3 month zinc has exploded to like 200 a metric ton with cash over the 3 month. So that's clearly supply short, physical shorts. So zinc's ran up. Let's talk about zinc for a second. We don't talk about it a ton, but it's up, almost 6% on the month. Aluminum's up 8% on the month, and copper, I'm sorry, yeah, and aluminum and copper are both about up 8% a month. And then today, to open the week, we're getting a big move in copper going up to test like the May 24 highs at 11, which were 11,100 a metric. And we're right there today. We're just below it as LME London shuts up or shuts down for the day here. And Corey, we're actually moving into some backwardation now. Small, but backwardation on the cash to 3 month. On the close here almost looks like it's getting close. So you've really flattened that out. Cash to 15 month is in backwardation. So it's just like rolling through these metals markets. As you know, it's been a great year, interesting and great year for metals. And I think the U.S. China trade talks over the weekend, look, it's moving forward. It seems like we'll see, how those things go. They can move sharply the other way quickly. But that meeting later this week, I think, is looking very positive. A lot of that news coming out over the weekend. So a nice move up in base metals today. Didn't see much in crude. Crude's kind of flat. We can talk about that later. But yeah, it's pretty positive. There was a lot of talk also at LME week let's talk about like the fundamentals of why we've seen these moves. Like I said, the month to date, year to date, copper's up 25% on LME. And if you look down at like LEMX, the LMEX index for the year's up 20%. I think a lot of people would point to when they did the singular sessions per metal, just underinvestment over a long period of time, finally catching up in the pricing. And you've had a general inflation of all assets, it's about gold, silver, equities, anything.
Yeah, hey, that's very true. And metals have been very strong this year. Just curious though, in terms of backwardation, throughout history, when we have seen any of these metals markets in backwardation, do you have a rule or a general thought in which way markets go after that backwardation corrects itself? Is it bullish? Is it bearish? Or does it not really mean much longer term for you?
That's a great question because it depends on what the backwardation's due to. It's been interesting in copper until now. We're like really flattening out. We've had this move up in the front, but it's still stayed, in contango, which is like a fundamental shift in copper price up across the board. And you've held contango because everything equal, cost of carry, a normal commodity market should be in contango. So I've always looked at it from like the clearest way to look at it in my mind has been actually in like the oil refining space where you've got everything humming along normally, all things equal, you're in contango reflecting the cost of money. But then if you have a hurricane or something that's a supply shock in the front, you're going to flip into a backwardation. Big supply shock because hurricane comes through, knocks out refinery capacity, shuts in production. So you're going to flip into this backwardation. So I've kind of looked at it that way. Clearly, the moves in the past few weeks seem to be physical shortages across zinc, silver. That's historically, what's going on. What happens after that, it's not clear. It just depends on what caused the shortage in the move into backwardation. But generally, it kind of flushes itself out over time. What would be interesting to see is if this backwardation, like you hit it and then the back of the curve flips back up. But usually it has to do a lot more with what's going on in the front of the market than it does in the back historically.
So, Dale, just curious, at LME week, then let's dive in a little bit more to precious metals because those have been extremely volatile just in the last about week and a half, and they're going through a correction. Gold is down somewhere around 8% from its highs. The stocks are leveraging that downward motion with GDX being down about 18% from its highs. But those were also all-time highs that just kept tacking on to themselves. So, what was the conversation at LME week around precious metals? And now, what are you thinking now that we are in this, what everyone was calling for, waiting for a correction?
Yeah, again, generally positive. I think everyone, that was 2 or 3 weeks ago now, you know, obviously prior to this, what I'll call a healthy flush out in the past week. So it was really positive. Yeah, I mean, I view this as a pretty healthy move. I mean, you're down 8% in gold on the 5 day, maybe 10% in silver, but still, you're up 50, 60% year to date. So yeah, I think, the momentum trades, the trade was getting crowded and more crowded. I think everyone was kind of waiting for some kind of a correction back, some profit taking, take some of the steam out of the momentum, which has happened. And now I think everyone's, especially specific to gold, trying to figure out where's support going to be. And we're right at 4,000 again today. So, late last week, maybe 4,100, but right now we're at 4,000. So who knows? I mean, I think it's healthy. I think it's good for the market. I don't my opinion, and I hit this in my update yesterday, like the fundamental things behind this move higher, I don't think have really changed. I mean, you've got some more transparency, at least today, on US-China trade talks, which is going to help, kind of gave it some ignition to move lower here. So we'll see. I think gold and silver too, like, kind of like copper's made in the past year or two, three, like up to new levels, and I think it's kind of reset itself. We'll see where it flushes out. But I mean, overall, I think it's a good, healthy move.
Yeah, that's the thing, right? As much as people might get worried and see these $100 to $200 moves down in gold each day or some days, it was due, and corrections are healthy in bull markets. We don't know how long it's going to last or how deep it's going to go, but as maybe the correction continues, then we can reanalyze if it's more than just a simple correction. On to base metals then. Sounds like the outlook at LME week still pretty good for a lot of base metals, and copper has done pretty well. There's also that kind of gray area between some of the strategic or critical minerals that are two different classifications in themselves, and then also tying into base metals and some of the deposits that hold just a mix of all kinds of metals. What about base metals? Copper's doing well, but the whole base metal complex, now that it seems like we're getting some better trade news.
Yeah, like I said, the LMEX, the whole base complex is up 20% year to date, 3% in the past week. It's been a really strong week and about 7% on the month. So yeah, like I said, LME week was really positive and everyone came out of there and it kept moving higher. So I think copper's, obviously like for precious metals, gold's pure play. For base metals, it's copper. Like kind of your market leader, most liquidity, thick market. So I think aluminum is next and it's being flushed up with it. Zinc we've talked about, and tin, that's an interesting one. I don't study it deeply, but it's been really strong, up 23% year to date. So I think the whole complex has been generally positive. The fundamentals, I think you'd point to two things. One, like how it's been kind of undercapitalized for so long. Aluminum specifically was just a dead market for years in terms of a lot of interest, and then it's just very balanced. And now it doesn't look like it is as much. And that gets in the Midwest premium, and that's more tariff driven. And then the other thing, I think there's just a general there's continued inflation of assets. More moves into hard assets, but it's across the board, whether it's equities or hard assets. You've just had a general inflation, and that's hard to say. What portion of it is just inflation and what portion of it is the fundamentals. But again, it's really positive.
Now, what about these critical minerals or strategic metals, especially around rare earths in the US? Boy, oh boy, those stocks and some of those prices went on absolute tear earlier this month, and now they're correcting hard as, again, we've gotten some better comments, I guess, out of the White House, especially with relations with China. Critical minerals, strategic metals, is that story over? Is it just beginning? How are you viewing it?
I don't think it's over by any means. And you're right. I think the sell-off is an amplified, similar move you've seen in gold. It was overdone. U.S. China trade talks are positive. It's a less liquid market, clearly. Even in the equity space, they're just not the super volume on those. So you're going to have amplified moves. Silver's more amplified than gold, I mean, for sure. But then you get into rare earths, it's even more amplified. My opinion on this. I've always kind of said, well, I don't know that they're that rare, but we've kind of made them rare with the lack of refining capacity and basically outsourced all that to China since the 1980s, 1990s. So we put ourselves in that position. It's clearly part of the trade negotiations. So, and it's obviously more important and more prominent than it was in the 80s and 90s, but it's going to take time, I think. And I don't follow it really closely. Some of your other speakers do, and I've really appreciated some of the podcasts in the past few weeks. The amount of investment where the government's getting involved now here to make up for that lost time on resources and the rare earths and refining capacity. There's various companies. I don't remember all the names, but that's an interesting space. And I'm sure the stocks probably got ahead of themselves a little bit, but I don't think, it's not going to be out of play at all. Very interesting.
It is interesting. And I think noteworthy to see it just back on or on a lot of people's radars for really the first time. We've talked with some of our other generalist guests, and they were playing some of those rare earth stocks, and they are into the precious metals. These investors aren't typically or always in the sector. So, yeah, definitely this year for metals, especially, have gotten on a much wider audience's radar. Let's now go to energy because it's kind of funny. It was a month ago, and really the last few months, we were talking about how all these other metals sectors were looking so well, and energy just kept on lagging. Oil did have another, let's call it marginal breakdown below its trading range and continued decline in price, but it's slow and stair stepping in nature. But oil has even rebounded back above $60 a barrel for crude natural gas. That had a really big move one day last week, early on last week, where it was up 12 or 13%. Make sense of energy now. It does seem like there is a little bit of rotation in money out of metals broadly and into some of the old school energy.
Yeah, crude finally made a decent move last week. And I do want to talk about crude and natural gas, like US centric indexes as it pertains to a lack of a COT report. We're going on 4 weeks without a commitment to traders report. And it's not a huge piece in the big scheme of things, but it is a piece of data. And I think the longer, again, from a US perspective, that we go on without a COT report, that lack of data as a percentage of decision making can kind of accelerate. But so crude last week, we had a nice move up, like about a $3 move up, I think it was on Tuesday morning. That was mainly on the US sanctions on the Russian big producers. It's held, which I didn't think it would. I thought it would fade. It's starting to fade a little bit, that $3 gain. Yeah, we dipped down to like 57. Now we're back at like 61.50 here on Monday close. So about a 6-7% gain. Interestingly, the diesel market's up 11% in that same time frame, and Russia is a big exporter of diesel fuel. So I think the story behind that, again, to be determined, is if the sanctions, going, I think that, the big buyers were with India, and that's theoretically what's going away. So China's running out of more and more people to sell to. I think this triangulates into the meetings this week. It's not being talked about as much. It's, this week it's a lot of soybeans and TikTok and different stuff. But I think this crude announcement is very interesting because the fallback on the buyer is going to be to China now, theoretically. So I think that gets into these meetings this week, one way or another. So crude bumped up $3. It's holding its gains. Again, I'm still bearish. There's a lot of oil out on the global market. There's been some really good coverage by Bloomberg on the amount of oil at sea in tankers. The IEA predicting almost 4 million barrel a day surplus now going into next year. So I think this move will fade. Natural gas has been really jumpy in the front, and that is very reflective of some short covering on the November contract. November rolls off the board this week on Wednesday. I think the market was positioned very short. Weather has been, and it's starting to turn cold a little bit, but it's really marginal in my opinion for the big moves we've seen. We had a huge swing again on Friday with it down 10 or 15 cents, and then right at the close, it got back to flat. So that's very reflective of positioning on this November contract for NYMEX. I think options roll off tomorrow. Today is interesting. You've got a 13-cent gain on the November contract. In December, essentially flat. Actually, the back of the curve's got some negatives. So this all the movement right now is on this November positioning. We just haven't had, we've had a very normal October, and November looks to be a pretty normal weather, and we've got ample storage. So it's going to start to bleed into December. But big moves, and that back on the COT report, you get commodities like natural gas, very U.S. centric, at least from the NYMEX perspective, and crude from the WTI perspective, and you don't have that piece of data. When it comes to the quants and models and position taking, I would think you're going to be a little less risk out there than there normally would be because you're missing that piece of data and you're flying blind on that particular piece. It's not everything at all, but it's a piece, especially in the quant buying and program model trading. So I think you're going to turn back the risk taking a little bit on that until we get some clarity around COT. Because the last reports we had at the end of September, gas was very short. So you've seen some covering here.
So are you expecting major moves out of energy then? I'm a little on the fence here on where the energy sector could go. Natural gas has been doing better. Oil, again, has just been in a downtrend. But are there positive moves that have your clients saying we want more exposure to energy because it's maybe one of the more undervalued commodity sectors that we see?
Yeah, that's a good point. I mean, I think in the fuel side, you've had some really good entry points for hedging fuels in the past month that kind of got bumped, especially on diesel last week. I mean, OPEC Plus doesn't seem to want to come off of their stance right now to increase production. So you're going to have a big surplus in 2026, at least as it stands today. So it's going to keep grinding down. But certainly like, on the equity position, I mean, for rotational, I could see some of that money starting to flow back into that because it's been beaten down a little bit. But I don't know. I'm still, I've been like this all year, Corey. Like kind of range to lower on crude, grinding down. It it has been relatively boring compared to most years so far. And natural gas, we're just again pretty fair value. The values look good. The curve looks pretty normal, and it's waiting. for winter and some weather, sitting on good storage. So if it keeps, normal to kind of non-eventful on the winter weather side, I think this will continue to kind of grind down slowly until we get past the kind of December, January contract.
Okay. So I guess looking ahead then, Daryl, you did outline many things that we could be looking for in energy, but broadly, anything major that's on your radar before we chat again, probably in about a month's time?
I still think the interesting markets to watch are base metals, aluminum, copper in particular, starting to push this 11,100 mark on the 3 month today. And yeah, precious is going to be interesting too. So I don't know. I'm still mainly interested in watching these metals markets right now. It's been a great year. It's been really fun.
It has been. Now might be a correction. Who knows how long that correction is going to be? Well, it definitely is a correction, but we just don't know how long it's going to be or how deep that correction is going to go. But yes, everyone does need to realize just how well and how much of an outperformer the precious metals and the stocks were throughout this whole year compared to every other sector out there. Darrell, we'll wrap it up here. Always great chatting with you again. Darrell Fletcher is the managing director of commodities at Bannockburn Capital Markets. Thanks for spending time with me again this month, Darrell, and we will touch base more around the end of November.
Great. Thanks, Corey.